Hey, it's Bill Gross, the LA probate expert, and I often meet with leading experts and vendors in real estate investing, both for my own education and research, as well as to share with my clients. Today, I have George Brumis, who is involved with cost segregation, which really was a term I know a lot about or enough about to not have to pay attention to it until one day I got a huge tax refund because of my cost segregation. I fell in love, and the first guy I met to hug was George. So, George, welcome to our time today, our call today. It's great to have you with us.
Thanks for having me, Bill.
And the name of your firm is?
Cost Segregation Services.
There you
And
go.
yeah,
Pretty simple. What do you do? Cost segregation
we do
services.
cost segregation services.
And the name of the company is Cost Segregation Services. I love that.
Inc. Yeah, CSSI.
And does that mean, well, what's your role in the company?
So my role is to meet with building owners and educate them about cost segregation. And if they're interested, we get a free analysis done for them. And either folks have done it before, and once they've done it once, they usually do it every time moving forward,
Sure.
or they haven't heard of it and they're like, wow, what is this? And sometimes it could sound too good to be true, but we work together with them and their CPA. And basically, if you get an analysis done, you can determine, is this going to be a good thing? Can they use the tax benefit? And that's what we do.
I think the cost segregation and the tax advantage is often not fully sold to the benefit of the investor, because for me, one of the parts of that is it really is a loss mitigation. At least I'm getting some money back right away in a tax deduction. And the reason why I got interested in this was I'd heard about the tax advantages, but when I did my first multifamily as a limited partner, I invested $50,000 in December, a year and a half, or a couple years ago. And on that year's tax returns, I got a K1 for $41,000 loss, which ended up putting in my pocket, I think net, about 9,000 federal and a couple thousand state. And so I got over a 20% return in essence by the tax advantages. I hope and I expect the investment will make money. I'll make it back and then be a profit. But the beautiful thing was, if it fell apart and I never heard from them again, I got some of the money back already. And that just mitigates some of the loss. So it's a tremendous opportunity. Let's talk about what is the tax advantage in investments, and then how does cost segregation magnify that or maximize that?
Yeah. So first of all, for folks that don't know much about it, when you buy a commercial building, it's automatically put on straight line depreciation, and that's over 39 years, or unless it's a residential rental, then it would be 27 and a half years. So in the case of the commercial building, you do get a tax benefit every year. It's about 2.5%, and it goes over 39 years. But what most building owners don't know is if you get a cost segregation study done, they'll break down the different components within your building. And some components need to stay at 39 years, like the roof and the walls and that type of thing. But there are several components and items within your building that can be depreciated over 5 years or 7 years or 15 years. And so what we do we're an engineering firm, and our engineers look at every square inch of your building. And they do that when we get started. We come out and we take a couple hundred photos, outside, inside, the roof, every door we open, basically bathrooms everywhere. We take pictures, and then when they get really started in earnest, they'll blow up every picture and they'll see every component. They'll look at the security systems and HVAC and electrical and you name it. And then they're able to put these into buckets where items can go into the 5-year bucket. So when we think of 5 years, I'm looking down at my carpet right here. I know that it isn't going to last 39 years. So it makes sense that it's put into the proper bucket, and that's a 5-year bucket. So when we look at the whole building, it could be that we are able to accelerate 20%, sometimes it's as high as 30, of the total amount of depreciation. And we bring it forward to this year for the taxpayer to be able to get a tax benefit. And as you've known, Bill, recently, when you went to the store to buy some food, everything seems to be like $2 more right now because of inflation. And so with the time value of money, the idea is that if you have this, the building owner, the investor gets this in their hands, they're going to make better use of it than, first of all, the money is not going to be worth as much 10 years from now as it is now. But they're going to use that money. Maybe they'll have money to get that next building or whatever they want to do with it. It'll reduce their taxes. And so that's in general how it works. Now, if you do any renovations to the building, as say you get a single family home and you put in $80,000 to renovate before you start renting it out, those renovation dollars increase the amount that you can get, increase the tax benefit. And so we look at, we track all of that. But to get started, you really just need a few items. And basically, we need to find out when you bought the building, how much did you pay for the building? Did you put some renovations into it? If so, how much did you invest? And when did you put the building in service? And did you do a 1031 exchange or not? And so if you did a 1031, that's great. That just changes the numbers around a little bit because you deferred some of the gain from the last place, put it in the new place. But then we let them know in the free estimate what they can expect to get back. And we're usually like to be more conservative when we're doing the estimate, and hopefully they'll be surprised with a little bit better tax benefit on the back end when it's all done. And the process usually takes 6 to 8 weeks from the day we go to do the site visit to take all the photos to the engineers. There's a little bit of back and forth, and we like to get your CPA involved so they know what's going on, and we work well together with them, and they like it because sometimes it's hard for them to find new tax benefits for their client. And by doing this, you get a nice tax benefit, and you pay a fee to get this done. And it's based on the size and complexity of the building itself. But usually the ROI is excellent. My last couple deals, the ROI has been 12, 19, 31 to 1. So it can be like you experience yourself, Bill. It can be a great thing.
Well, it's never bad to get money after taxes. It's only bad when you pay little taxes because you didn't make much money. Now that sucks. But when you make a lot of money and you make good investments and you shelter properly and you take advantage of the rules of the game that are legal, that's fantastic. Unless you paid. Okay, so on a multifamily building, if you buy a $10 million building, you're not depreciating the whole 10 million because a good chunk of it's going to be land, right? So you're only talking about the portion of the property that's structure as opposed to land. So let's just say arbitrarily it's 40%.
That's right.
The $10 million purchase, you might be depreciating in total $4 million over 39 years. And what you're able to do is by segregating it, some things are written off in 5 years and 7 years, 15 years. And so we're able to take the $4 million that we would do, over 40 years almost would be about 10,000 a year times.
It's like 2.5%, per
right?
year.
And so instead of $10,000 depreciation per year, you might get 20% more of that. So maybe 2,500 to 3,000 to 13,000 per year depreciated in the upfront year. So that's a nicer check, obviously, in terms of an investor getting a deposit, getting a return. They're going to get some of their depreciation back before they start getting profits and start seeing the cash flows. So what's the most, well, first off, where are you located, geographically? I know you're in California. But
I'm in California. Our headquarters is in Baton Rouge. And we're the largest firm doing this, and we've been doing it over 20 years and over 30,000 studies. And we work in all 50 states. Wow. And so no matter where you are, I have clients. I'm from Chicago originally. I have clients in Chicago, but I'm currently working on deals in Florida and Texas. And so no matter where it is, if it's nearby, I'll do the site survey and go out there myself, get a chance to meet the owner and take all the photos, because it's just nice to kind of see it yourself. But if it's somewhere else, they'll just show up. I had a client recently that had 2 office buildings here in California and a single family home in Indiana. So one of our team members showed up there and took all the photos. And so no matter where it is, we can do it, show up and do it. And then the engineers get started with their process. And there's a little bit of back and forth. So anything that we can get from the client that will help us be more accurate, we ask them for. So if they happen to have blueprints of the building, appraisals, whatever they have, invoices for the work, construction that may have been done on the building, we get all of that. And in the end, we usually complete a form for their CPA, which is called a 3115 form. It's a change of accounting method form.
Mhm.
And they love that we do it because we do it fairly inexpensively, and they don't really usually like doing it. So at the end, when we're done with the cost segregation study, then we complete that form, we get it to them, and then they use that to basically insert the results into the taxes to get the reduction. And then the full study itself, what I think is kind of neat is there's a number of items. It's very detailed. So there's 10 or 11 different building components within the building, and our engineers figure out the current replacement cost for all of the items within your building.
Well,
So if something happened where you're dealing with insurance company and they're trying to give you hardly anything for something, you could go to this professionally done study and say, this is what the current value was in 2021. Also, if you had a fire and needed that information, or if you had a fire and you didn't have photos, we happen to have a couple hundred photos that we'd be happy to share with you. But that information they can use to make decisions moving forward. They may say, wow, should we get a new HVAC system? I wonder what the current one, the value of that is. And they can kind of look and see, wow, it looks like we still have a lot of life based on the study. So it's a nice thing for the CPA to have and the building owner.
So for the syndicator, maybe who hasn't used cost segregation before, you do some sort of analysis for free. Is that just kind of a pencil based on estimated numbers? And then, and how long does that take to put something together? If I had a project and I said, "Jen, never really done that before. We've always gone straight line. Tell me about your service. You tell me it sounds good." What's the process to get an estimate?
Yeah. So on our end, we can get it done in around 24 hours.
Sorry, Siri
That's
jumps
okay.
into my conversations.
Maybe she
Shut
can
up,
answer
Siri.
the question for me.
No, she can't. I already asked her all about cost segregation. She didn't know anything.
Okay. Well, so anyways, we can get the free analysis done in about 24 hours. But what we need to get from you is, if it was a building that was purchased last year, then you're not going to have a depreciation schedule yet on that building. So we want the closing settlement statement. We want to know the date you bought the building, how much you put into the building on any renovations, if any, the date you put it into service. And we want to know if you did a 1031 exchange or not. And if so, how much gain did you defer into the new place? And basically that's it. And we take that, and we also want the address of the building and the name of your company. But with the address, we can look it up online. We want to know the type of building, because some medical buildings have a lot more equipment and are different from a warehouse type of building. But with the information that we have, we like to do it quickly, but they're pretty accurate. So you give me that information on something you're working on, and some people can pull it together in 15 minutes, and others, I'm contacting for several weeks to get it, but it's not a lot of information. You get it to me, we run the numbers, I get it back to you, and then you can share. It's a 12-page document, and you can share it with your CPA, and it'll show you how much the fee itself is that we're going to charge, how much is going to be accelerated, and then how much your tax benefit is going to be. So basically, the amount that it's accelerated times your state and federal tax rate will determine how much your tax benefit is going to be. And then the kind of icing on the top of this is these are these are tax deductible, basically, that the study itself. So so if you have a study, you're gonna there's an after tax cost, and then we let you know what the ROI is too. So to give you an idea, a recent building I'm working on was around $4.5 million building itself. And the tax benefit was around $190,000 for the owner. On this particular one, the after tax cost was just under $6,000, and the ROI is around 31 to 1. I have another one here. That same type of thing. It's just based on the size and the complexity of the building. I have one where the ROI was 12 to 1, one 19 to 1. They're, in general terms, it's a really nice ROI if you can use it. You mentioned earlier when you're not making much money.
Right.
If you're not making money, then you're not paying taxes, which means you're not going to want to pay me to have an engineering study,
right,
if you can't use it.
Well, and as an LP, I think I have to make sure that I find investments that are lined up with my style of investment, right? Because I love the tax benefit of real estate because I have good income. There'll be a time I won't be that way. There'll be a time, retire in maybe 3-5 years where my income is mostly passive, and I'll be maybe looking to maximize, after tax revenue. But right now, I'm making good income and I want to get returns. But I have to be conscious of how much taxes I'm paying. So I'm definitely watching for investments that are in the same case. So it's interesting. So 40-unit project, $4 million. The cost was after taxes $6,000. So I imagine the total fee is probably closer to 10 or something. But in the course of investment, they have a pool of money for fixing the property. That's just one more asset in the investment for their client. So it seems to me that makes a lot of sense for the investors. Now take off your hat as a service provider for a minute. Let's talk about it as a business. What do you do to generate business? Obviously, I've met you on a couple of different multifamily investment Zooms. Is that primarily is it just networking? And I know you've been around for a while.
Yeah, no, I belong to networking groups. Networking groups are the biggest way that I meet people. And I'm from Chicago, have a lot of friends and past coworkers, and I'm the type of guy that has a lot of friends, and we have a referral partner program. So I let them know how that works. And every day I think a lot of people since the pandemic have been on nonstop Zoom calls, and that's what I do. I have been on another podcast recently to get the word out. I basically, everyone I know, because it's something that's helpful, I like to tell everyone I know that has a building to see, hey, have you done this yet? If not, would you like to look into it, or can I talk to your CPA? Because so CPAs are a big referral source for me. I like to reach out to CPAs after April 15th, of course.
Yeah.
And see if they have any clients that I can help out. And of course, commercial realtors themselves, they're ideal because they can reach out to past clients of theirs to let them know about this thing that they may not know about. And so with that, it's a nice thing. They're helping out a past client. They're also, we have a referral partner program, so they benefit with that. And then they can also, as part of looking forward, if they're about ready to close the deal, I'm happy to work with them and do a free analysis even before they sell, before the next person buys it, and they can give it to them and say, I know you haven't purchased yet, but when the ink dries, I want you to know that you could get, X dollars right away, tax benefit, if you do cost segregation. And a lot of times they've never heard of it. And they're like, wow, this, it's a kind of a value add that they can provide.
Nice.
Yeah. So it's my dad was in commercial real estate. And I grew up in the advertising industry. I wanted no part of it. And because I wanted to be a writer. And so many years later, my dad's not here, but now I'm back to commercial real estate and working with people in this field. And I have an appreciation for it. And it's and the size of the deals can range from a giant hotel building all the way down to a Airbnb rental in Florida. So size wise, $150,000 or more building, we will look at, and everybody, there's big players out there, and then there's small players, and the small players, they appreciate every dollar. So if they get even a couple grand that you're not paying in taxes, it's worth it. And it's nice to have the in the end, that the federal depreciation schedule is very accurate, right? So it's nice to have it where it's supposed to be, instead of because you can make decisions, you can use it. It just makes sense to have this accurate thing to be able to look at and use as a tool, versus just having a page that says 39 all the way down the page.
Right. And you're not getting the full benefit at that point. So
yeah,
that's just how they did it. They figure if you're lazy enough to pay us too much in taxes, we'll take your money. And most people fall for that. Same thing with payroll taxes. Most people fall for that and get a refund, and they're excited about the refund. If they adjusted along the way, they wouldn't have a refund, but most people don't even take the time to do that.
Yeah. And the deals that you talk about that you're doing, when people put those together, you're right. They look at all this ahead of time and make it part of the opportunity, saying, here's the opportunity, and here we're going to do cost seg as part of that. And it's just one of the tools that makes it better.
It's interesting because as a limited partner, I'm looking at deals. I'm not, intimately involved in them typically. I never have been. And so you're trying to look for a manager company that's experienced in a team that knows what they're doing. And one of the key indicators is they talk about they're going to do cost segregation, or they have it done already. It tells you they kind of know the game already. If I was ever to ask them if they have it, and they ask you, well, what's cost segregation? I would zip my wallet up and put it back in my pocket and walk away real fast. So to me, it seems like a minimum standard I can understand if that's not consistent with their target for their investment for their personal reasons. Okay, I can respect that. But if you're not doing it and you're trying to raise money for investors, to me, it seems kind of silly. Well, George, I really appreciate the time breaking this down, and I going on. And personally, we can talk about some business as well. But if somebody wanted to talk to you more, how would they get a hold of you? What's the best way to find out more about your service?
Yeah. So my first of all, my name is George Brumis, and so this is my LinkedIn page. So feel free to contact me here. I probably, if you clicked on that, I bet there's a phone number there with the contact info at the bottom there, below my name. There's a phone number there. And so George Brumis, B as in boy, Rumis, and you can reach out to me. And that number is great, 424-835-4500. And it goes right to my cell phone. And so call me. We can talk about this. And it's an exciting thing to learn about. And when you do the free analysis, it's nice. Sometimes I tell people, just let us do it for the heck of it, just so you could see how it works. Sure. And it's all their money, right? So it's just stealing from the future a little bit to bring it forward, so you can take advantage of it in today's dollars, and
lower your risk. I think having the cash now rather than down the road, it just limits your risks to have it in your hands. Of course, now you got to do something with the money, so maybe you can invest more or something. Yeah. Well, look, George, I appreciate it so much. Look forward to seeing you again. I know I bump into you on various multifamily Zoom calls, but thanks for being on the call today, and look forward to working with you personally.
Thank you so much, Bill. I appreciate it.